Hey guys, what's up? Alec back with another stock market investing video, and today what we're going to be talking about is comparing four stocks against each other, and it's going to be two different groups. So if you guys like the financial part of the video, this video is definitely going to be for you. It's going to be Shopify versus Wix and PayPal versus Square. Square is a credit card processing company, and they also own Cash App. Great to compare those against each other. And Shopify and Wix, both are some of the top platforms for new or smaller sized businesses to take advantage of. Wix is going to be the website creation and makes it easy for new people, and Shopify is obviously where they sell the products online. So let's get right into the video and start comparing these stocks against each other. All right, Shopify's our first one up. It's at $11.90 right now, $1,190, on its way to $1,200. And you'll actually see in the last 2 years, this stock has really picked up some steam, especially in the last 2 years. It was just at about $150 stock, and now it's almost 10x from that point. You'll scroll down, you'll see it's a huge market cap of $145 billion. The PE ratio is 720, but at least we know it is a profitable company. All right, so first we'll compare Shopify and Wix against each other, and then we'll come back around for the next two after that, PayPal and Square. Now, Wix is at a $269 stock, and it's been trading at a common support and resistance for the last about 6 months now. And what you'll see is in the last 2 years, it's actually picked up a lot of steam, just like Shopify. You look at the market cap is significantly smaller than Shopify, so you automatically see that Shopify is a very big company. So Wix is by far the smallest company on this list, and we can tell that by looking at the market cap. The other ones are all in the hundreds of billions too, so keep that in mind. All right, so we have Shopify's financials pulled up, and you'll actually see that they have been beating earnings consistently Q4 of 2019, Q1, Q2, Q3, all of 2020. So there's a good shot that they actually beat earnings again in Q4. Again, this is Shopify. You can look at the top and see ticker symbol SHOP. And if you scroll down to net income, you'll actually see that in the last 4 years to 5 years, they actually were not a profitable company at all. And 2020 is a great year for them because they first became profitable this year. Now, if you look at their total revenue, they are a revenue monster and a revenue growth beast, is why I really like this company for long-term growth on revenue. I think that they can easily be getting up to $3 billion, $6 billion in revenue over the next 5 years. So what you'll see in 2015, they started with $250 million. Of course, they were public before that. So in 2014, you can see they had a 95% gain in 2015. In 2016, they had an 89% gain in revenue. Colossal and massive revenue growth for a company to be displaying. So it's really nice, and that's why I'm really attracted to Shopify, is because you see their revenue growth machine. They're getting 50% plus per year for the last 5 years. If we go down to their balance sheet, this is how you know that your money is safe and you're in a safe company, and there's a good chance that the stock's going to keep going up and they won't go bankrupt or anything like that. So is the balance sheet. Look at those assets to liabilities. It's absolutely huge. So in 2019, they had almost 6 to 7 times the amount of assets than liabilities, and their liabilities to assets was only 13%. And that was consistent over the last 5 years. Their assets to liabilities is always on point. It's one of the most important things to look at when looking at a stock. So if you got this far in the video, you just learned something new on this company too. Their cash and cash equivalents is 174% year over year, which is really amazing. And if we go down to their actual total long-term debt, it looks like it did not grow. So it looked like it did not grow, and the good thing is if you look at other current liabilities, it went down 15% year over year, and their long-term deferred tax liabilities went down 100% year over year. Now, their total non-current liabilities went up 738%, which isn't the worst thing in the world because it is not a current liability. So overall, I would be pretty impressed if one of the stocks on the list today that we talk about actually beat out Shopify for my number one pick on this video. They're growing revenues by 50% a year. They have an amazing balance sheet. So those are two great things to look at. And they have a great business model overall for long-term growth. All right, so next up we have Wix with some negative earnings. It looks like they missed earnings big in 2020 Q2. So they could potentially miss on earnings again. And if you scroll down to their income statement, their total revenue, if we look at total revenue first, it actually looks like they've been growing by 40% every year. In 2019, they had 26%, which is a really great thing. So they are a revenue monster as well, growing revenues by double digits every single year. That's why they've actually caught my attention, is because they're revenue beast. Now, if you look at their net income, it isn't going to be as good as we want it to be. So in 2019, they reported their biggest loss in the last 5 years, and that was $86 million at a loss. So that's a big red flag in my opinion. So they do need to fix that ASAP before they earn a higher spot on this list. Their revenue is great, and their balance sheet is not as good as I would like to see it. Do you guys remember how amazing Shopify's balance sheet looked like? That's what I want ideally all my balance sheets to look like, and why I like Shopify so much. So if we click into the balance sheet, you can see their cash and cash equivalents is down 44% year over year, which is a huge red flag for me. It's probably like the number one red flag is cash and cash equivalents is down 44%. Their short-term investments are up 70%, and account receivables is up 42%, which is what they're receiving on their monthly payments, which is a great thing for their business model to be up. Now, if you scroll down and you see their long-term debt, it's up about 132%, which is another red flag. So far, I predict this one's probably going to be number 4, number 3 on the list. Right now, it's number 2 because we only talked about Shopify and Wix. So Shopify still holds that number 1 spot. All right, so next up we have Square at $235 a share, and it's up 21% in the month, up 67% in 3 months, up 270% in the last 1 year. And if you pull up the 5-year chart, it's up 1,700%. Now you'll actually see after 2019, about 2020, is when this stock really started catching steam. And with the lockdown and the shutdowns, it really did benefit because people needed to take a form of payment without actually being in person. And what you'll see is the PE ratio is 385, which implies it might be a little bit overvalued right now. I would obviously like to be buying this stock under $200 ideally, and it has a huge market cap at $106 billion. So if we look at their earnings, what we'll see is they are a positive earning company, which is always a great thing. In Q2, Q3, they both beat earnings both quarters, and in Q4 they probably will beat in Q4 as well. In Q1 they did lose, which was a bad thing, but that was before the whole pandemic and everything started. So since we're in the pandemic now, I think Q4 will be just fine also for them. Now, if we go down to net income, what you'll see in 2019, they had a huge step up from 2018. And I'll pull up their 2020 numbers and actually put it on the screen because I think it is a lot better than $375 million on their net income. So we'll pull that up on the screen for you, but it does look like they've had some great growth on their net income. Yeah, obviously in 2015, they started at 170 million negative, and they only went to 171 million negative in 2016, but they've been making steps in the right direction, and they've had about 1,000% earnings. So to show 370 million in earnings, that's really good for them. Now, obviously, all these guys are absolutely revenue monsters on this list. And if you look at their revenue, they've been growing revenues consistently by 30 to 40% for the last 5 years. That's how you classify a revenue monster. Anyone that's growing 20, 30, 40, 50% a year for the last 5 years in revenues, that's probably a company that you want to be looking at. And it's one of the first things I always like to look at when looking at a growth stock specifically. Now, I'm sure their revenue can grow even higher. I'd like to see consistent 20, 30, 40% growth, even 50% in the next 2 to 3 years. But if we look at their balance sheet, it isn't as good as Shopify, but you will see it is better than Wix. So if we click into their balance sheet, their cash and cash equivalents is up 246% year over year, which is amazing thing. Very, very, very good. Short-term investments up 36%. Account receivables up 47%. Other receivables up 136%. Inventories up 57%. So there's a lot of good things going on with this company right now on their balance sheet. And if we look at their long-term investments, it is down 10%, which isn't the worst thing in the world. But if you go to their long-term debt, you'll actually see some of that stuff's up too. So total current liabilities up 132%. Total long-term debt up 89%. So this company overall is better than Wix in my opinion, but not as good as Shopify. So right now we have Shopify number 1, Square number 2, and Wix is number 3 currently. Let's take a look at PayPal. Okay, and next up we have PayPal, ticker symbol PYPL. You guys probably all know it and all love it. Up 23% in 1 month, up 36% in the last 3 months, up 118% in the last year. And if you pull up the last 5-year chart, it's up 572%. Now, this one specifically did start taking off a while ago, but in the last 1 year to 1 year and a half, it's actually been making some really nice move upwards too. So obviously this one's been building its brand for a long time, especially in 2017 to 2019. It went a long way. And then from 2020. And this whole year, 2020, has been an absolutely crazy ride for PayPal, just like all these other stocks that we have been talking about on this list. Now, the market cap, $279 billion company. Wow. It's the biggest stock we talked about on this list. And the PE ratio is clocking in at 89, which is one of the lowest PE ratios on this list too, implying it is not a horrible deal right now. It's one of the better deals on this list if you're just looking at its PE ratio alone. Now, obviously, I would want to be buying this one under $200 as well and closer to 180. But I think it will take some time to reach those numbers. So let's go ahead and take a look at the financials where they currently stand. Okay, so here we have PayPal's financials pulled up, and the first thing we're looking at is EPS. Yes, they are a positive earning company, which is always a great thing. First thing to check off and to look at when you are looking at a company. Now, you see they missed earnings in Q1, and then Q2, Q3, they did beat earnings. And in Q4, I think they have a good shot at beating earnings once again and being a little bit higher even than Q3 or Q2. Now, if you scroll down and you actually go ahead and pull up their net income, look at that net income. It's a beautiful sight to see. Even their net income is up double digits consistently every single year, except for 2018 where they only went up 5%. But they did recover in 2019 with an 18% upward movement. Now, if we pull up their total revenue, this is the least beast of a growth revenue company on this list. But PayPal's focus is more on the bottom line because you can see their net income is consistently gaining and they know how to make a profit. And they've been making a profit for the last 5 years plus. And right now they're at $2 billion in profit. And their revenue's looking pretty nice too. So what you'll see in 2015, they went up 15% from 2014, then 17%, then 20%, 18%, and they went up 15% in 2019. Now, if we look at their 2020 numbers in Q3, they actually went up 24% year over year from 2019 to 2020. And their Q3 2020 was $5 billion in revenue, which if they did $5 billion in revenue consistently every quarter in 2020, they would have $20 billion in revenue, which is another nice increase for PayPal. So their balance sheet isn't as nice as Shopify, but it looks like around the same one as Square. So if you would look into their balance sheet, their cash and cash equivalents is down 11%, which is a small red flag. and their short-term investments are up 124%, which is awesome, and their account receivables is up 15% too. Now, if we scroll down to their current liabilities, the bad thing is they're up 33%, and their long-term debt is up 80% overall. So PayPal is going to be getting the number 3 spot. The official rankings is Shopify is number 1 currently. I mean, look at that balance sheet. I wish every company I invested in had a balance sheet like that. It's absolutely flawless, and they are a revenue monster. And then after that, we have Square, and then we have PayPal, and then we have Wix. So that's the official list, guys. If you like how I actually dive into these stocks and dissect them and look at the financials, income statements, balance sheets, there's a lot more to learn other than just looking at those things. But that's a great place to start. If you want to learn more too, DM me on Instagram. I have a wait list going on for my close friends group. We are 100% capacity right now, but I am filling up the wait list for when I open signups back up. Other than that, like the video. Make sure you please like it. It goes a long way, especially when I put the time and effort in everyday videos for you guys. At least share it with a friend, like it, drop a comment below. Those things let the algorithm know that it should be recommended to more people and it should be recommended to you to get my channel out there a little bit more. And the great thing is these videos are actually helping people. I have DMs all the time saying these free videos, help people a lot. They change the way people think, especially these in-depth videos and the financial side of it like this one. So guys, I will see you in the next video very soon. And until next time, remember, don't time the market, buy the market. Peace.